Hey traders, every morning in the Sector Secrets Mastery, we spend 1 hour or about 50 minutes day trading. So you might ask, Rag, why only 1 hour a day? Well, first of all, there's an old saying maybe that you're familiar with, which is amateurs open the market, professionals close it. So if I'm going to go toe to toe with anyone, I'd rather take advantage of that amateur hour in the morning and take advantage of that move. And today we set up SMH. Now, how many day trades can I presume I'm going to get every morning? I get that question a lot. And usually, on average, because I don't want to be scalping in and out, but I'm looking for some good moves that can hit T1, T2, possibly 100% return on premium. And that's usually on average about 1 to 3 trades from about 9:35 to about 10:25 in terms of the entry zone that I'm looking at each morning. So 1 to 3 trades in that time. This is East Coast time. You can see that in the upper left-hand corner of my screen. So 1 to 3 trades. We had 1 today. And what we're looking for are moves that are above the previous session close, sink down into the support of one of my 3 core setups, which is either a mean reversion, a volatility-based support level, or the Darvis support. Now today, we sunk right down into, you can see right here, the hourly price movement range, which is my volatility-based support level. These are all automated. The red zone, the green zones, the yellow lines, they're all automated. So I'm just waiting for price to come down to a high probability level. Now the cool thing about the automation is whether you're on day 1 or a day 101, you know what that zone means. It's either resistance or it's support. And so in this case, and I'm a support and resistance trader. That's what I love. I've been doing that for 38 years. So we sink down into support. Well, the idea is right here. Okay, so we put the whole trade idea out. Now notice we set this up at 9:37. So as 9:37 is happening, I'm typing this out to my members. We don't call in audible and say buy now. I give everyone the entire plan. And in this case, you'll see we bought the 340 17 October calls when price got down to 339, 338.83, and 338.16. So you might say, Rag, what is aggro, moderate, conservative? How do I get in? Well, I'm going to show you something I don't know that I've actually shown in this video before, but this is the Sector Secrets Mastery Position Sizing Guide. And what I teach traders to do is figure out how many, and let me write this in here, how I use this, how many dollars worth of options. It's not a fixed, let's buy 10 calls, right? It's how many dollars worth of options can you buy? So for one of my accounts, I can spend up to 15K, but I'm going to scale in at each one of my levels, aggressive, moderate, conservative. I don't have to spend this much. That's a maximum, right? That's like the red line on your car. I could go to that level or I could go less than. I might get partialed on my fills. I may not be able to fulfill all of those dollars, but that's the goal, stay within that. So now we know how many dollars worth of options. Well, let's stick with this math so I can show you here how this would work. All right, so if I am allowed to spend up to $15,000 and the option's gonna cost, varying degrees. I'm gonna show you what I got filled out here in a moment. So you'll notice that I got 2 fills, 405 and 385. So I know that based on the moderate trigger, I'm allowed to spend up to almost $4,000 or $3,750. So how many contracts do you buy? Well, $3,750 divided by, what did I pay? 405. This is all math that I'll have ready to go. So I know I can buy about 9 contracts. And when it gets down to conservative, it's going to be double that. So I can buy up to about 18 contracts. So now you know, all right, Rag, 9 plus 18, now we got a pretty good idea of what you've got in terms of position size. And again, this isn't about the number of dollars you've got. If you have a $12,000 account, if you have a $5,000 account, you're just going to do the math based on that because we don't want to risk more than about 3% of our account in case we're wrong. So buying, again, right about here, because it slid down so quickly. So I got the 405 and then I got the 385. All right, we'll talk about option, the way that it moved in just a moment. My first scale out, you can tell from the notes here. We always know what the first target is. The first target was 340.90, and that happened right in here with the 10:05 candle, right? And then the second target was either 100% or the area between 342 and 342.50. Well, we hit the first target during the 10:05 candle. We hit the second target between the 10:50 and the 10:55 candle. So you might say, Rog, all right, well, if we're talking about the first hour of the day, what happens after 10:30? Well, you can place, and this is what I love to teach my traders, since we know what the level is, you're going to place an alert on your platform of choice at 342.45. And when that alert goes off, now you know it's time to pay yourself, right? Go back into your platform and pay yourself and scale out once again. So let's walk through what these 340s did together. Now you know my position size. Now you know what we're getting in based on. And I love being able to go into this depth of detail with you all. Now, if you want to day trade with me and you say, Rog, I understand this process. This makes a lot of sense. I don't want to day trade all day. Neither do I. How would I do this? Well, come join us in the Sector Secrets Mastery. If you go to sectorsecrets.com, you can get a $7 trial for $7 and join me for an entire month and see what it is that we're doing in the room with trades like this, in addition to swing trades and long-term account growth trades. On Friday, I'll do a video on the swing trades because I will be closing out Barrick, uranium, gold miners, and gold, and I'll show you the way in which we took advantage of that move with a swing trade approach, where I'm taking exposure overnight, unlike the today trading of day trades. So here are the 340 calls, and now you're going to get a good idea of what the entry prices were like and how price moved. All right, so if you remember from the price chart of SMH, this was where we were getting into those options. You can see what my prices tracked to, 405, and then 385. By the way, we went below 385, but that's where I got in. And through this little bit of noise, as long as I'm not losing 25% of premium paid, which we never came close, I'm going to hang on to that. Unrealized risk, sitting through heat, as it's called in trading, is perfectly normal, but not 100%, not even 50%, 25 cents on the dollar. All right, so the first target came in at 10:05. You can see here that candle shot up through there, right around my target. You can see we were trading at about 5:05, 5:10. We went as high as 5:38, but I scaled out the first time at $5.10 after paying $4.05 and $3.85. So here is where I'll scale out of up to 33 to 50% of the number of contracts that I bought, which I showed you earlier. All right, so then we know moving up again between 10.50 and 10.55, we moved into that second target, and this is where we were trading between about 5.90 and about $6. That's the second target, right? This is where I'm scaling out again. Now, here's the important part. Once I scale out at T2, my trailing stop or tightened stop, I like to say tightening stops, I tightened it to my T1. So now I'm locking in those profits at the T1. So if this thing rolls over, I don't let a winner turn into a loser, and I'm locking in at least some of those profits because we've got to be willing to risk some house money. We're not going to pick the top. We're not going to pick the bottom. We've got to be able to give the trade a little bit of room to move, but not so much that we let it turn into a loser or give back too much of our profit. That was what we did this morning in the Sector Secrets Mastery, and I would love to see you in the room. Head on over to sectorsecrets.com, and I look forward to seeing you there.